0.005%. That's what Apple paid in taxes on $100 billion in profit. You probably paid 20% this year, maybe 25, on a fraction of that. Let that satisfying ratio sink in for a second. But here's where it gets absurd. When regulators ordered Apple to pay $13 billion in back taxes, the government that was owed that money fought to not collect it. We'll come back to why, because that answer explains everything. In the next 10 minutes, you're going to understand how this works, who designed it, and why it's probably never going to change, unless enough people get angry enough to change it. Let's start with the obvious villains: Cayman Islands, British Virgin Islands, Panama, the places you picture when someone says tax haven. Wrong. The country that enables more corporate tax avoidance than anywhere else on earth isn't an island. It's the Netherlands. Windmills, tulips, progressive politics, and the world's biggest tax haven. Funny how that works. And they're not alone. Luxembourg, Ireland, not rogue states, founding members of the European Union, same guys who write the rules against tax avoidance. They're running the biggest tax avoidance operations. The call is coming from inside the house. Now, someone built these systems, and I'll tell you who later. But first, you need to understand what they built. Because here's the thing, the core trick is embarrassingly simple. Once you see it, you'll wonder how it's legal. Spoiler, it shouldn't be. What if you could loan money to yourself, then charge yourself interest on that loan, then deduct that interest from your taxes? You're paying yourself and getting a tax break for it. Obviously illegal, right? Completely legal. Exposed corporations do this every single day. Let me show you a real example. Real company, real numbers, real documents that leaked and proved all of this. GlaxoSmithKline, British pharmaceutical giant. They created a subsidiary in Luxembourg. This subsidiary had maybe a dozen employees, tiny office. And somehow, this tiny office managed to loan billions to GSK's operations worldwide. GSK Germany borrowed from Luxembourg, paid interest, deducted it from German taxes. GSK France did the same. GSK America. Every country where GSK made money, they borrowed from their own tiny Luxembourg company and deducted the interest payments. And what did Luxembourg charge on all that incoming money? They'd negotiated a special deal, fractions of a percent. The money comes in as interest, gets taxed at almost nothing, and stays there. Billions shifted, tax bills slashed, all legal, all approved. And this is just one company. But wait, because it gets weirder, much weirder. 12 employees, managing billions in loans. Wouldn't someone notice? Wouldn't tax authorities ask why this tiny office is moving more money than most banks? They did notice. They asked. And here's where the tax avoidance industry revealed its true genius. They didn't hide. They manufactured reality instead. They create substance, fake substance, just enough to check the legal boxes. One building in Luxembourg serves as headquarters for over 1,000 companies. Same receptionist answers phones for Apple, Amazon, and IKEA subsidiaries. Board meetings? Executives fly in, sit for 15 minutes, fly out. Corporate theater. Still with me? Good, because that was the simple trick. The next one is even better, and it's how Apple got to 0.05%. Quick question. What is Apple actually worth? The stores, the factories, the fancy headquarters? What's the most valuable part of Apple? It's the logo, the software, the patents, the brand, stuff you can't touch. Intellectual property, worth hundreds of billions. And here's the beautiful part. From a tax perspective, you can put it anywhere you want. So Apple moved it to Ireland, created a subsidiary, transferred ownership of the intellectual property. Now, technically, an Irish company owns the iPhone, the software, the brand, everything valuable. Now, every time Apple US wants to use its own technology, it pays royalties to Apple Ireland, billions flowing out of the US, where it would be taxed at 35%, into Ireland, where the rate is 12.5. You seeing the pattern? Pay yourself, deduct it, move the money somewhere with lower taxes. But 12.5% wasn't low enough. Apple wanted less, much less. So they found a loophole. Under Irish law, a company incorporated in Ireland wasn't automatically Irish for tax purposes. You had to be managed in Ireland. So Apple created an Irish company managed from Bermuda. Bermuda, 0% tax. This company was incorporated in Ireland, but not Irish. And because it wasn't American either, it belonged to no country, a ghost company, tax resident of nowhere, hundreds of billions flowing through an entity that legally didn't exist anywhere. The result, 0.005% on billions, Meanwhile, you filed your taxes like a sucker, paid your 20% like a chump because you can't create a ghost company in Bermuda. You don't have the lawyers. Now, Ireland eventually closed this specific loophole. Political pressure. The double Irish is officially dead. And three more doors opened the next day. New structures, new loopholes. The accountants who designed these things, they're not going to just quit. They adapted. They always adapt. Which brings us to those architects I mentioned, the people who actually design these structures. You ready? PwC, Deloitte, KPMG, EY, the Big Four. You know them as auditors, the firms that verify companies are playing by the rules. Turns out they also design the plays, same firms, auditing the game and rigging it simultaneously. Every major tax scandal leak, LuxLeaks, Panama Papers, Paradise Papers, Pandora Papers, their names appear in every single one, not as investigators, as architects. And there's a revolving door between these firms and government. Tax officials quit to work for Big Four. Big Four partners get appointed to tax policy positions. The people writing the rules and exploiting them, often literally the same people. All right, halftime. You now know more about corporate tax avoidance than 90% of people. Let's talk about what it costs, not in abstract billions, in terms that actually matter, in terms of you. Global estimate, somewhere between $500 billion and $1 trillion lost to corporate tax avoidance. Every single year. 1 trillion that doesn't build roads or fund schools or staff hospitals. Want a statistic that'll radicalize you? African countries receive about 50 billion in development aid annually. They lose more than that to corporate tax avoidance. The help coming in the front door is smaller than the wealth going out the back. Aid is a PR campaign masking extraction. In your country, when corporations pay less, you pay more. Income tax, sales tax, property tax, every tax that can't be gamed gets raised to cover the taxes that can. The burden shifts from those with accountants to those without. Your local business pays 30%. The chain store across the street pays 3. Same customers, different rules. We call that a free market. It's not. But surely after all those scandals they fixed it. They said they fixed it. They lied. Let me show you. The global minimum tax is 15%. Sounds good. Except the US already charges 21. UK charges 25, Germany charges 30. A 15% floor is actually below everyone. It's a ceiling dressed up as a floor. Corporations can still save massively by shifting profits. The reform locked in their advantage. And the rules are Swiss cheese. Carve-outs, exemptions, transition periods lasting years. By the time lobbyists finished, more holes than substance. And the architects, already adapted, new structures designed before the ink dried, they're always 2 steps ahead. Remember that Ireland story from the beginning? When the EU ordered Ireland to collect 13 billion from Apple, and Ireland fought not to take it? Now you understand why. 13 billion is nothing compared to keeping the system intact. They refused free money to protect the machine. This isn't a bug in the system, it's a feature. Tax havens exist because powerful people want them to exist. The system works perfectly, just not for you. But, and this is important, things have changed before. Not because the powerful wanted them to, because enough people got angry enough to force it. The Panama Papers didn't leak themselves. Someone decided the world needed to know. And that leak led to prosecutions, resignations, recovered billions. Exposure works. It's the only thing that ever has. 10 minutes ago, you didn't know any of this. Now you do. The loans, the IP transfers, the ghost companies, the architects, who pays and who doesn't. The $1 trillion isn't an accident, it's a choice, and you're no longer ignorant of that choice. The people who built the system are betting you'll do nothing. Too complicated, too powerful, too entrenched. That's what they're counting on. You doing nothing. Every system that ever changed because enough people refused to accept it. What you do with what you learned today is up to you. The offshore world isn't somewhere else. It's the same banks, the same companies, the same accountants, same economy, different rules for different people. That's the whole game. If this helped you understand something powerful people prefer you didn't, share it. Subscribe for more. And tell me in the comments, what are you going to do with what you learned? See you in the next one.